Hi everyone, this is Stephen from ACCT 3107 Hong Kong Taxation course. Today I am going to analyze 3 problems of Unit 10 regarding the deductibility of expenditures and losses incurred in different cases in the calculation of profits tax. So let us begin with the first problem. In the first situation, Company A placed the sale proceeds into a time deposit account, which suffered an exchange loss afterwards due to the fluctuation in the exchange rate. To determine whether the exchange loss is deductible, our first priority is to determine whether this exchange loss is capital or revenue in nature, as it will be treated differently under different classifications. Basically, if the exchange loss is capital in nature, it will not be allowable. However, if it is revenue in nature, it will be allowed to be deducted. We can look for similar cases that have happened in the past to see if there is a lesson to be learned. Regarding the similar problem, the case of CIR versus Lee and Fong Limited in 1980 can serve as the base for our judgment. According to the final outcome of the case, though the money came from sales, the nature of the money changed into capital investment once they were deposited into the bank. As a result, for Company A's capital nature exchange losses in the question, we will not deduct them in the calculation of profits tax. So after setting the first problem, let us look into the second one. In the second scenario, Company B paid a sum of money to the researcher to avoid potential future competition. To confirm the deductibility of this payment, we need to examine whether it falls into Section 17(1) regarding specific non-allowable items. Under Section 17(1), there are several specific non-deductible items such as domestic or private expenses, cost of improvements, all payments and provisions to unregistered retirement schemes, and capital expenditures, etc. Among them, we can focus on this term called capital expenditure, which can have a strong relationship with the payment in the question. In particular, though the sum paid for the non-competition agreement is a one-time payment, it can substantially create continuous benefits to the company by eliminating potential competition. This feature is basically of the same nature as a capital expenditure, such as payments made to acquire properties and plants by a company to derive long-term economic benefits from them. Therefore, under Section 17(1)(c), this payment should be classified as capital expenditure, which is not deductible. As can be seen from the second case, Section 17(1) is very useful in determining the deductibility of expenses. Now let us move on to the last case. In this case, we have to determine whether the loan paid to the supplier, which was subsequently written off, is deductible or not. To solve this question, we can refer back to the Section 17(1). After going through all the items, we put special notice on Section 17(1)(b), which says that, subject to Section 16AA, any disbursements or expenses not being money expended for the purpose of producing chargeable profits basically is non-deductible. While Section 17AA talks about the mandatory contributions in self-employment cases, which is, by the way, not relevant to this situation, the loan paid to the supplier can be regarded as an expense which does not rise from the production of assessable profits. The reason is that it is neither arising from the sale process nor the company is carrying out any money-lending business. So, the loan was simply offered to secure a stable supply at a very high financial risk. As a result, under Section 17(1)(b), the loan written off also will not be deducted. So that is the end of the discussion of the 3 questions. To conclude, based on the case of CIR versus Lee and Feng Limited, as well as Section 17.1, after careful investigations, none of the expenses in the 3 situations discussed are deductible. In real-life conditions, cases can be more complicated and they will require even more efforts to examine and thoroughly based on the wider range of laws and regulations. So this is the end of my presentation today. Thank you so much for watching.